Of all the sectors bucking the trend, commodities were perhaps the brightest spot, garnering $15 billion in inflows. Investors are getting a lot of mixed signals, though, from the economy, painting a confusing picture around inflation. We have crude prices falling, but no sign of any real relief at the pump yet. And industrial metals like copper and aluminum are getting crushed. The Invesco DB Base Metals Fund, ticker DBB, has fallen to a 52-week low. Will, you've been tracking this one. What's behind the drop? And is this, in fact, a hopeful sign for the bulls as far as the peak inflation story goes?
Yeah, I think that, clearly we've seen some softening in commodity prices over the last few weeks. And indeed, actually, if you look at all the major commodity prices around the world, all are now back or below where they were on February 22nd when Russia invaded Ukraine, with the exception of one major commodity, and that's iron ore. So I look back at the broader trend, which started at the bottom of the market in 2020 when oil and the rest of the commodity complex bottomed out with the market. And if you look at the Bloomberg Commodity Index or our ETF, COMB, we're back down to where we were on trends. It's still up 10% year to date, which obviously is great compared to most things at the market. But I think a lot of that premium that we saw, particularly over Russia-Ukraine, has now come out of the market.
Todd, where were some of the most popular bets on commodity funds placed this year?
Well, we saw demand for precious metals-oriented ETFs like GLD and IAU. Those are some of the examples of those pure gold-oriented ETFs. We've seen also greater demand, perhaps, for the more broadly diversified suite of commodity ETFs. You mentioned Invesco earlier. Invesco has an ETF, PDBC, which is a diversified ETF. It has exposure to those precious metals, as well as exposure to agriculture, energy, a whole bunch of these different commodities sectors. You can get exposure to that. We're seeing advisors gravitating more towards that. We did another survey recently as part of a webcast at Verify, and we're seeing advisors want that diversification. They like gold, they want exposure to that, but they also want exposure to those other bond sectors.
Speaking of gold, Will, I want to get your thoughts on this. We're seeing the U.S. dollar hit its highest level in about 2 decades. Does gold have any hope of bouncing back here?
No, absolutely, because really the question is on the dollar is how long can this last? So as you said, this is an environment where we have a really strong dollar. But historically, gold prices have responded negatively, and it's one of the main reasons why gold is down today. But if you look at other currencies in the world which are not doing as well as the dollar, you see gold up at highs, or even in some cases all-time highs, depending on the currency that you're looking at. So I think that this is really a question of gold has done well, in my mind, to hang in here at these levels, given the pressures that we've seen from the dollar in this rising interest rate environment. But I think that the longer-term picture here is, if rates start to come down, or at least if they stabilize from these levels, and if you see some dollar weakness, I think gold is well positioned.